Hey guys, Lance Martin, Coldwell Banker Town & Country on the Martin Group, here for our July 2025 Real Estate Market Snapshot. Let's jump right in. All sorts of craziness going on. Same QR code, which by the way, the QR code will very quickly, as in today, link you to the details for our 2025 market forecast, the big event that we do. We have a date set, September 10th. We'll be doing a live in-person event. I think last month I told you I don't have a venue set yet. I do not have a venue set yet. However, we'll get that coordinated here in the next couple weeks, and we'll start blasting all sorts of information out. So September 10th, so we're about 2 months away. Very excited. I'm actually going to do a second event. I'll talk a little bit more about it, but this will be our traditional in-person market forecast with our economists and everything to go with it. So please mark your calendar for September 10th, and we will see you there then. So let's jump into what's going on in our Southern California stuff. A lot of interesting stuff, at least for me. If you did not watch last month's snapshot, the one we did in June, which covered the May data, quite honestly, I would recommend you go back and watch that one because these tie together and they're building a theme, maybe. So what's going on with median price? Basically, prices were fairly stable. You can click into the chart, 15 years of data, go do your thing if that's what you're into. But this is what we're looking at in the 4 counties. Basically, mid to low single-digit appreciation, 6.9% in LA, 3.6% in Orange, half a point negative in Riverside, and 2.2% positive in San Bernardino. So if I said, well, wait a minute, did you watch last month's? Because, you know, these charts get a little choppy, and these are month-over-month numbers. This is June of 2025. These are the percentages compared to June of 2024. And at any given month, these things can swing a little bit. So if you watch last month's, you'll see a couple of extra red arrows there, meaning we had month-over-month lower median price in May 2025 than we did in May of 2024, prior year. This year we did a little bit better, but these numbers on balance, I actually like them. They're slow, they're steady, they're even though we've got a little bit of negative numbers here, and we'll talk more about what my prediction or what my forecast is for property values at the end of the year. So at any rate, $1,080,000 in LA County, 1.4. By the way, these are single family residences only. I've stripped out like the condos and some of the other stuff. So when you're looking at these values, so a single family property, any bedroom type, could be a studio, all the way up to a 10-bedroom if there's something out there, which I'm sure there is. So as long as it's single family, no condos, no townhomes, no mobiles, or anything like that. So $1,008,000 for LA, 1.45 for Orange, 630 for Riverside, which has been very consistent. That 630 number seems like it's been a number for quite a while. And the same thing in San Bernardino, about 550. So median price is basically stable. We'll talk more about that in a little bit. I did want to share with you, this is the same chart I had last month. I left it up here because I isolated this little pullback we had between April of 2022 and November of 22. You saw all of these median prices come down. And I did that last month because I still believe that we're potentially going to see a pullback in property values between now and the end of the year. Okay, especially if interest rates stay elevated, even though we've seen some improvement on interest rates. And if interest rates continue to improve, forget what I just said, but if we continue to see interest rates close to that 7% or above rate, then I'm thoroughly convinced we're going to see property values pull back a little bit. If that doesn't happen, don't worry about it. But this feels like we might be in tune for another one of these by the way, this was only about 6 months where we saw property values pull back during that middle of 2022 range. So at any rate, and by the way, if you're really, really into that, the chart 2 clicks ago, you can go in and you can click into that chart. It's the exact same chart, and you can hover over exactly what those values are and what they did. So for those of you that really like it, there you go. Okay, supply and demand, new listings only. These are properties that came on the market in the month of June. Click on the chart if you want, but you see a whole bunch of trailing numbers where basically the value or the inventory went down. Now again, compared to where we were a month ago, these numbers don't look quite as soft. I don't want to say as bad. They're not good or bad. They just are what they are. But we actually have 2% more new listings in LA County, almost 10% fewer in Orange, 9% fewer in Riverside, and 3% more, 3.8% more in LA. But these are new listings. These are brand new listings that hit the market. I track those because generally speaking, we should still continue to see more new listings. We're not. Now, this is the one that's really got me interested. These are all the listings, every single listing that's come onto the market and has not sold or came onto the market. Again, 15 years of charts. If you go way, way back to, the bad old days of 2008, 9, and 10, super elevated listing inventory and quite honestly problems. So all listings, inventory building on the marketplace. People start to look at this and they get concerned. Oh, there's more listings on the market. They're not selling. What's going on? So almost 20%, 26%, 16%, 25% more listings in total in the 4 counties. Now, and this is compared to the 2024, the one that's kind of annoying and pulsating at us. But I just kind of highlighted this one up here just to give you an idea. Back in 2003, I'm griping. We don't have enough inventory. We don't have enough inventory. Frankly, I've been saying that for several years. But this 20% in LA and 26% in Orange is based on these numbers. But just take a look at 2023. 7,600 listings in LA County. Now we got 11,500. $4,000 or 4,000 more properties today than we had 2 years ago in the same month. Orange County, 2,300 compared to 3,500. So we got about 1,200 more. Riverside County, 5,000 compared to almost 7,400. 2,400 more listings. And then again, San Bernardino, almost 4,000 to 6,300. So this is the deal. I've said this multiple times over the last several months. I'm not allowed to complain about we don't have enough listing inventory, which I've been doing for 3 or 4 years. And then when we start to get the listing inventory, now all of a sudden say, I don't like the listing inventory. So even though these numbers are building, they're fine, okay? But we may see a pullback in property values based upon that. So pending sales, as always, this is the brutal part. Click into this. Our pending sales are still trending in the absolute wrong direction. 30% down, 37% down, 18% down, 22% down, year over year, June to June, horrific numbers. I'm actually going to send this video to my good friend, Sean Blankenship. Well, he was one of the Coldwell Banker corporate guys for a while. We hung out a little bit. He's now moved back into the actual sales side, has an independent Coldwell Banker in the Tennessee area. We bumped into each other totally by accident today. I was preparing my market snapshot. He does what I do. He owns some offices, Coldwell Banker offices in Tennessee. And I just started, I'm looking at these sales numbers. How you doing? They're down 30%. They're down 37%. And Sean's like, yep, that's exactly what we're seeing. I don't know if he said exactly, but very similar to what they're seeing. This is not just a Southern California phenomenon. This is, you can stack this up, I think, in most places in the country. Some better, some worse, whatever it happens to be. But these pending sales numbers are just brutal. And again, I'm not going to do the same thing and go through every one of these, but if you just compare LA County in June of 2023, 2 years ago, we sold 3,000 houses. Last month, we sold 2,000 houses. These are big drops in pending sales. So, which is why I'm continuing to project and forecast that we're going to see property values pull back a little bit. The buyers are nervous, the interest rates are high, prices are high, inventory is building. It just feels like we're going to see a little bit of I hate to use the word correction. I threw this chart up 2 months ago. I've added a couple things to it, all right? So this is 15 years of sales data, pending listings. If you watch my stuff regularly, I added these little green dots on here. And these are when sales would peak, okay? If you went through the 15 years of this, and you can click on that chart if you want to do it yourself, most of these peaks are basically somewhere between April, May, right around April or May for the most part. Some of them might be June, one of them might be March, but of these 15 bullet points, 13 or 14 of these green dots are going to be peak sales in April of May of that given year, okay? A couple of months ago, I pointed that out because I said, our peak sales seem to have peaked back in March. We peaked in sales, and I just said, I think we might have peaked in March. Well, guess what? We've peaked in March. So why is that bad? Well, because if you're in my side of the business, you don't want to have peak sales in March. You want to continue to sell more homes in April and maybe more homes in May, and God forbid, more homes in June. So especially when sales are down. Now, I added a couple little things here, and I didn't go through and put these little red balls all the way across, but if I did, they'd basically be the same. So these are peak sales, basically April, May, okay? We peaked in March. What these are the trough of the sales. So when did we actually hit the lowest number of sales in any given time of the year. And if you go down, I'm just looking at the blue one just because it's easiest, but the blue and the gray, they all match up. You just hit these bottom little dips. Those are the fewest number of sales in any given month in that particular year. Every single one of these is going to be December. It's possible maybe one's November, I doubt it. It's possible maybe one's in January, I doubt it. So what am I saying is, when do we sell the fewest number of homes in these 4 counties? It's in December. Well, guess what? If you go back and you take a look at where we currently are right now, which was last month, June, which is supposed to be a good sales season, even if it's not like the best month, maybe the month prior was better. We now basically in the month of June 2025 sales have basically troughed in what we normally would see in the month of December. Not good, okay? And again, mostly interest rates, a variety of other things going on, but it is pretty crazy to see these numbers of sales down in the month of June, similar to what we would see in the month of December, which in theory could mean, if interest rates stay where they are, this particular number is going to get lower and lower and lower. So to be honest with you, I'm fearful as to what this number is going to look like in December. It could be very, very ugly if this trend continues. I don't like it, but it is what it is. So these are the same charts I had before. I just put up here, no change, just a bunch of headlines. Existing home sales fall. Pending home sales tank 6% in April. This is the same chart I had last month. I'll just go quickly. Dr. Jung with NAR, basically home sales down 30 years. Yep, we all know that. And frankly, my buddy Sean just confirmed. Same thing's happening in Tennessee. Days on market, 32, 28, 48, 42. Honestly, those are not big numbers. I just did this, not this presentation, but I pulled up a similar chart of data with some of the folks in my office. I'm actually questioning if maybe I'm missing something, maybe I'm checking the wrong box when I pull up this chart. I need to talk to Art Carter with Sierra MLS and say, is this what you're showing? The reason I say that, these numbers seem light. It just feels like these average days on market numbers should be higher than this. So, for now, although frankly the 48 in Riverside feels about right, and the 42 in San Bernardino feels about right. Quite honestly, the Orange County 28 seems light. But anyway, we'll verify that. Bottom line, days on market are increasing fairly significantly. And again, if you just want to look at the percentages, 23% higher, almost 50% higher, 30% higher, 27% higher. So these are from a year ago, anywhere between 27 and 50% more days on market, which again ties into our theme very nicely. Month supply, same thing, 4 months, up to 5.3 in San Bernardino. I don't think I've seen a 5-month supply of inventory in the city or the county of San Bernardino or any of these counties in probably 15 years. So inventory's building. There you go. We got a theme going on here. So my spotlight city is Lakewood. I haven't done this one in a very long time. For those of you that know me, Lakewood is home. I was kind of born and raised and grew up in Lakewood, so it's got a little soft spot for me. So by the way, let me go back one. You guys can click into these just like the other ones if you're interested in what's going on in Lakewood. But just like every time I do this, there is one little interesting part with Lakewood, which is why all the data is local. I might say, oh my gosh, property values are down over here, or sales are down over here. You isolate a zip code or a neighborhood, it could be completely opposite. So where are we with price? $882,000 median price in the city of Lakewood. That's 3% higher than it was a year ago. A little choppiness here. It's really interesting. I don't study Lakewood recently. Again, I lived there for the better part of my childhood. Really interested to see kind of what happened in Lakewood in this particular. Actually, maybe this is, I take that back. I know exactly what happened in Lakewood. This is that range where we saw that dip in April of 2022 through November of 22. So there it is. And then they chopped back up. A little bit of choppiness, but it's a small data point. Active listings in Lakewood are up. Small city though, by the way. I mean, actually I think it's not too small, but pretty small data sample. So only 77 listings in the entire city, which actually kicked up a little bit. So, okay, that's nice. All listing inventory is up, which matches everything. Super, super choppy on the pending sales, but look at these pending sales. This is the lowest in 15 years. There's only 19 houses sold in the entire city of Lakewood last month, okay? That's a 55.8% drop from the month or from the year earlier, from the June before. Pretty dramatic, but it matches. It matches, even though there's a lot of like swings in here, it matches exactly what we've seen with all the other charts, all the other counties, all the other stuff. So Only challenge is if you're a real estate broker in the city of Lakewood and that's the only place you sell is in the city of Lakewood, well, hopefully there's not a whole lot of other competition out there because you sold 19 houses in the entire month. And I said Lakewood's a small city. It ain't that small. So at any rate, there's our market snapshot. If you wanted to see the other communities we've done, just keep clicking through this chart. You can click on the link below. And all this market, all the spotlight cities that I've done, I think I started doing them 2 years ago, they're all there. If you do click on one and the charts don't activate, shoot me a text. There's a period of time I got to refresh them, so I might have missed one. So where are we with interest rates in the 10-year bond? We've seen some improvement. I was on vacation for, I don't know, about 10 days. I was not monitoring interest rates, and I came back, and interest rates were dramatically better than they were when I left. Dramatically better, meaning we were at about a 7%. This is today, by the way. Today is July 7th, 2025. A week ago when I checked, this was closer to 6.6, okay? It might not seem that big of a difference, but that's a big difference. It's bumped up a little bit. 10-year bond is at 4.39. This was as of this morning. It's probably changed, since I printed this chart up. So it's been a positive trend. However, last week we got a positive job market, positive being, there's jobs. Generally speaking, it was in a positive trend. The positive job market doesn't help interest rates. It's kind of crazy. Good news over there is bad news on mortgage rates. If we had a bad, horrible job market and the world's ending and unemployment is up and openings are down or whatever it happens to be, that's bad news. That would basically be an improvement for interest rates. So if you're looking for lower interest rates, then bet against the job market. So good news is bad news is good. Having said that, we seem to be somewhat comfortably below that 7% mark. Not happy with it, but I'll take 6.79 as opposed to 7.12. So a little bit of relief on the mortgage rates there that we've seen. This is the same chart I've had up. Wells Fargo 6.5. We're not that far away. Maybe that's their forecast. Same area. I haven't changed this chart in 4 months. I still have us in the frozen zone. Why is it frozen? We're not selling enough houses. As soon as we start to see those pending sales move up, regardless of what interest rates are, but going to be interest rates to make them, to unfreeze this. But as soon as those pending sales come up, I will remove the frozen from my chart and I'll say, hey, we're starting to thaw out and things are moving in the right direction. So my forecast basically is more or less what I said a month ago, which by the way, I changed it last month. The red is the change I made last month. I was saying prices up, now I'm saying maybe not. I am forecasting property values flat to 1 or 2, maybe 3% lower at the end of the year than they were when we started in January. I didn't think that 2 or 3 months ago. Inventory up? Yep, inventory's up. I'm not moving off of that, and what have we been doing? This was my forecast as of January. Our inventory has just skyrocketed since January, so I guess I got that one right. I said sales volume was going to be up in January. Negative. Not feeling it, not happening. The sales season, if we're just counting how's the real estate market doing based upon sales volume, the season's over, okay? It's not gonna get any better between now and December 31st. So not only will we not see sales volume up, I think we're gonna see sales volume dramatically down. What does that mean? I don't know, 10%, 15%? I'm an outlier. All of the professionals who do this at CAR and NAR and all over the place, they're still forecasting an increase in unit sales at the end of December 2025. I don't see it, not in the 4 counties that we're looking at. And again, mortgage rates, no idea, but again, sustained 6.5 will help. So if rates go down dramatically in the next 2, 3, 4, 5 months, maybe we'll have a late year surge and maybe prices will go up, which by the way, if rates go down, prices will go up, okay? I'll have to change this. And then frankly, if rates go down, in theory, we'll see more buyers engaged in the market and maybe I'll have to change this. Not feeling it right now. So anyway, that's my forecast for the moment. So I hope to be able to see everybody on September 10th, the slide I had previously. Location to be determined. We'll have a great lineup of speakers. I'll be announcing all of that here over the next 2, 3, 4 weeks. And September 10th, I hope to see you. Otherwise, have a great July, and we will see you next month.